Welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today, July 24th, 2025, we are zeroing in on Alphabet, ticker symbol Google, following some significant news. Just hours ago, Google Cloud delivered a knockout Q2 earnings report, sending a clear message to competitors like Amazon and Microsoft. Alphabet stock initially turned higher after these strong earnings, with the company also announcing big spending plans on capital expenditures. Yahoo Finance indicates a current price of 191.51, a notable shift from previous trading, highlighting positive market reaction. Barron's also reported Google's stock jumping as earnings beat estimates, reinforcing the bullish sentiment. However, recent investor discussions, like those found on Seeking Alpha, previously suggested that the $170 range could have been the best time to buy Google over the last 5 years. Nasdaq, back in December 2022, had predicted Google shares to trade at $200 apiece by 2025, a target we've seen tested and even surpassed in our data. Now, let's turn our attention to the charts to see how these events translate into price action. Looking at the daily chart for Google, we can see a clear upward trend from March 2024 through early 2025. The stock steadily climbed from the 130s, eventually breaching the 190 level and reaching a 52-week high of 207.05 in early February 2025. This long-term bullish momentum is likely fueled by the underlying strength of Google's diversified businesses, including search, cloud, and emerging technologies like Web3. We can observe a significant resistance level around the 200 to 207 range, which marked a reversal point in early February. Following this peak, Google experienced a noticeable pullback, consolidating and finding support primarily in the 150 to 160 range around late March and early April 2025. This level acted as a strong demand zone, preventing further decline and setting the stage for subsequent recovery attempts. The volume analysis on the daily chart shows spikes correlating with major price swings, indicating significant institutional and retail interest at these key levels. For instance, the massive volume on April 7, 2025, as the price bounced from 140.53 to close at 146.75, signals strong buying conviction after a sharp dip. Another large volume spike on May 7, 2025, corresponded with a significant price drop from 164.08 to 151.38, emphasizing high market activity around this sell-off. Shifting our focus to the more recent activity on the 15-minute chart, we can gain a granular understanding of the volatility from July 23rd, the latest full day of data we have. Let's zoom in on the period of significant price swings, specifically from 1941 Universal Time Coordinated onwards on July 23rd. Here, we see a sharp downward movement beginning around 1956 Universal Time Coordinated, with the candle opening at 190.18 and plunging to a low of 184.51. This sudden drop, likely influenced by profit-taking or market reactions to the overall mixed sentiment on Wall Street, represents a key reversal point in short-term trading. However, following this steep decline, Google quickly found support, indicated by the subsequent candles showing a strong recovery. The very next 15-minute candle, starting at 2011 Universal Time Coordinated, opened at 185.88 and soared to 187.80, showcasing immediate buying pressure. This rapid rebound suggests that despite the short-term negative reaction, underlying bullish sentiment or automated buying systems quickly stepped in. The price then continued to rally within that hour, hitting a high of 198 before closing the day at 193.7. This intense intraday volatility provides opportunities for aggressive day traders, but also signals increased uncertainty. The quick rebound off the 184.51 low validates it as a crucial short-term support level to watch moving forward. Now, let's broaden our view slightly to the 1-hour chart, which provides more context for recent swings. We can see that this quick recovery on July 23rd helped prevent a deeper short-term reversal. The stock has generally been trending upwards since May 2025, climbing from the 150s, successfully breaking through psychological resistance at 170 and 180. Current support appears to be forming around the 188 to 190 range, which previously acted as resistance during earlier recovery attempts. For short-term traders, watching these intraday highs and lows is critical. Breakouts above recent resistance, like the 195 level seen on the 15-minute chart, could signal further upward movement. Conversely, a break below the 188 support on higher volume could indicate a deeper correction. For the long term, reasons to be bullish on Google remain strong. Their strong Q2 earnings, particularly in Google Cloud, and continued commitment to capital expenditures signal aggressive growth and innovation. Alphabet's leadership in AI and diverse technology portfolio, including self-driving and Web3, provides a robust foundation for future appreciation. The prior analyst target of $200 for 2025 now seems conservative given the recent price action before the dip. However, reasons to be bearish in the short term would involve sustained selling pressure breaking below key support levels. Any unexpected slowdown in ad revenue, increased regulatory scrutiny, or a broader tech sector correction could put downward pressure on the stock. The market's mixed reaction to earnings, with an initial jump followed by some volatility, suggests caution is warranted. Watch for the stock to stabilize above 190 to confirm continued strength following the earnings report. To recap the important price levels, immediate support is around 188 to 190, with stronger support at 184.51, which held firm on July 23rd. On the upside, immediate resistance is near the 195 to 197 range, followed by the 52-week high around 207. An unbiased short-term prediction suggests Google will likely trade within the 188 to 197 range in the coming days, with a 65% likelihood of attempting to retest the 195 resistance given the positive earnings. Conditions reinforcing this include sustained high buying volume and positive analyst revisions. A breakout above 197, especially with strong volume, would increase the likelihood of targeting the 200 to 207 range, potentially reaching Nasdaq's 2025 prediction. For a bearish scenario, a decisive break below 188 on high volume would open the door to a retest of the 175 to 170 levels. The likelihood of this is lower, perhaps 35%, unless there's broader market weakness or new negative news specifically for Google. Traders should look for confirmation on daily closes above or below these key levels before making significant moves. Keep an eye on overall market sentiment, especially regarding tech and AI-linked stocks, as they will significantly influence GOOGL's trajectory. Also, watch for any further announcements on Google's capital expenditure plans or new product launches, as these could provide fresh catalysts.